What's up, everyone? Excited to be here. Before I get started, I want to make sure that you guys can hear and see me okay. So if you don't mind, please just drop in the chat in the comments here. I just want to know that you guys can hear and see me okay. Along with that, as you guys are popping on here, please let me know where you're tuning in from. If you come up with questions during this, I will do my best to answer them. Today, we are going to talk about how to become your own bank. We're going to be talking about Infinite Banking 101. I'm going to expose the secrets, the hidden truths that the advisors do not want you to know. I'm going to expose a lot of misconceptions about it, and I'm going to show you two specific vehicles that I have used personally to become my own bank. And I do it time and time and time again. So we're going to break down the four-step process to mastering infinite banking. I'm going to break down some beliefs that you probably believe to be true and really just expose them. And then we're going to get into how to set this up properly, all right? How to set it up where you're building as much cash value as possible. And I'm going to provide the strategy that I use to create cash flow with infinite banking, all right? So as you guys are coming on, let me know where you're from. Again, I want to make sure that you guys can hear and see me okay. So just let me know in the chat. I see Boise, Idaho. That's awesome. Dustin, great to have you here. You're not too far from me. I'm in a Boise zip code right now. So appreciate you guys hopping on here. I'm going to get started in just a couple minutes. I know that there's going to be a few more people popping on here as well. And if you don't catch this live, it will be on my channel. So you'll be able to go back, pause, play, repeat, all that good stuff. Give me 1 second here, guys, while we just dive into this. I'm going to pull up a couple things inside here that I can screen share so I can show you guys some really good stuff. All right. As you guys pop on, let me know where you're from, what you do, all that good stuff. If you come up with any questions during this, just let me know. Okay, so infinite banking. This is not a new concept, okay? The companies that I use for infinite banking are older than Wells Fargo, Bank of America, Chase. They are some of the oldest companies in the United States when it comes to the financial sector. So here's a really big misconception, all right? I'm going to give you a statistic. 95% of insurance policies sold in the United States are what are called term insurance, index universal life policies, or variable universal life policies, okay? Dave Ramsey has a famous quote, invest term or buy term, invest the difference. That's what he says, okay? If you start doing a little bit of research, guess what you'll find out about Mr. Ramsey, all right? No disrespect to him, but Mr. Ramsey here owns and is invested in term insurance companies. So, of course, he wants to tell you invest in term, right? So 95% of policies, term, IUL, VUL. The problem with IULs and VULs is that they are predominantly what is sold in the United States for infinite banking, but they do not work well for infinite banking, okay? So here's what infinite banking is. You use a mechanism, typically cash value life insurance, and I'm going to show you another completely different thing that I use to become my own bank, but you fund it, and as the cash value grows, you borrow out of it so that you can invest in things that cash flow. You pay your debt back, you get all your money out of the deal, so anything above the cost of paying off your loan, you just keep. And you're able to repeat that process time and time and time again. So what a lot of people will do is they'll open up an IUL or a VUL, Index Universal Life Policy, or what's called a Variable Universal Life Policy, and they'll do what is called a policy loan. So I'm going to give you guys an example, okay? And if any of this goes over your head, please just let me know in the comments. I'll take as much time as possible to answer your questions on infinite banking, okay? So let's just say I have $10,000 saved up in an Index Universal Life Policy, okay? And I want to use it to go make investments that pay me cash flow, all right? I have to do what's called a policy loan. The second I do that, the growth of my cash stops, all right? That's the first problem. The second problem here that they do not explain to you is that when you invest in an IUL, you're also buying insurance. But those insurance costs in an IUL, they go up more and more year over year over year. And oftentimes, those rising costs are not properly disclosed to you. The third issue that we have here, okay, do you guys know how much inflation is historically in the United States? And Billion Boy, I'm going to get into something that you can do from Ireland in just a little bit here, so stay on, okay? Do you guys know what the historical inflation is in the United States? Just as a percentage, let me know in the comments, okay? Let me know what you think historical 100 years of inflation is in the United States. All right, Dustin says supposed to be 3% annually, okay? That's a good guess. Anybody else? Anybody else have a guess at how much inflation is historically in the last 100 years of the United States? I'll tell you while you guys are answering. Historically, in the last 100 years, depending on the source you look at, it's 2.65 to 3.2%. Okay? In recent years, it has been between 5 and 9%. Okay? So while you guys think you're making money in your high yield savings account that's paying you 5%, you're not making shit. You're not making anything. Okay? So that's something that isn't helping you. When you go work with an IUL, you're paying hidden insurance costs that rise every single year, and you have something called an IRR, internal rate of return. In layman's terms, it averages to be 4 to 6%. So you're paying for insurance. You're being told you can become your own bank with an IUL, but the internal rate of return is 4 to 6%. So you're not beating inflation. And when you go to become your own bank and invest in something that cash flows like oil or real estate, which we're going to get into, the growth stops. So that's a bad vehicle for becoming your own bank. But unfortunately, 95% statistically of policies sold in the United States are these policies, IULs, VULs, and term insurance. Okay. So what I do instead, those are the don'ts. We've covered the don'ts. What I do instead is I use a dividend paying cash value whole life policy. All right. And I do specifically what is called a HEC-V policy. That stands for high early cash value. All right. It's designed to build as much cash in early years as possible. Okay. And I throw money in that, and I have a line of credit against it. So I want you to think of it in two sort of scenarios here. If I have $10,000 and it's growing for me every single year, and I have a line of credit against it, this can keep growing. I borrow from my line of credit here, and every year that this policy increases in cash value, I increase my line of credit, and I work my way up like that. So if I have $10,000 here and I get a return of $1,000, for example, I have 11,000 the next year. Then I have 12,100. Then I have 13,300, and it keeps compounding. Okay, and every year that happens, I level up my line of credit. They are separate. This way, I can hedge against inflation. This keeps growing, and I borrow from my line of credit. Does that make sense so far, guys? Let me know in the comments. Okay. Now, from there, the next thing that I do is I want to invest in assets that cash flow. Okay. And before we get too confusing here, don't worry. I'm going to talk about the exact type of funds that I go into. I'm going to talk about the exact investments that I participate in, and I will show you how you can do the exact same so there's no guesswork, okay? And I have to say right now, I'm not a financial advisor, okay? So all of this is for educational purposes, but I do want you guys to think about something, all right? If you have a piece of paper that says you took a test and passed, so therefore you are a professional, does that really make you a professional, or do the results make you professional, right? Because at the end of the day, America's financial advisors consist of people who have taken tests that have all passed the same damn thing. And apparently, they are the world's professional financial advisors. And they are the population that tells you what you should do with your money. And then they get paid to tell you that. Okay? Now, I would say that if this population of financial advisors averages income of $100,000 per year, you should not be getting money advice from them. That is like walking up to somebody that weighs 642 pounds and asking them for fitness advice. That doesn't make sense, guys. So don't listen to the opinions of other people that don't have what you want, and stop getting your money advice from broke people. Okay? I can write on a sticky note too. I can decide what license I have and what I'm a professional on, and by the same definition, apparently I know what I'm talking about. So please understand that what I'm saying is education, and I'm coming from experience. of actually doing this. Okay. So carriers to keep in mind. The top dividend paying carriers in the United States for whole life insurance policies are Mass Mutual, Northwestern Mutual, New York Life, Penn, and Guardian. Those are the top 5. Okay. Now I'm going to give you a mind-blowing statistic here. That's also something a lot of people do not know when it comes to becoming their own bank. You have what's called a guaranteed return, and you have a non-guaranteed dividend. The guaranteed return varies between 2 and 4%. Mine's 4%. Okay. And then you have something called a non-guaranteed dividend. The reason it's not guaranteed is because you are only paid it so long as the insurance company you're using stays profitable. All right. So the insurance company that I work with has been doing this since 1851. So they've only been in business for a couple hundred years. And if you can figure out how to successfully run a company for a couple hundred years, it probably means you know how to make a little bit of profit, right? So this company has never paid a dividend less than 6% in 48 years. Never paid less than 6% in 48 years. All right. And that would be Mass Mutual. That's one of my favorite whole life insurance companies is Mass Mutual. And I don't get paid to say this, guys. I'm not getting a commission. I'm not an advisor. All right. So Mass Mutual has never had less than a 6% dividend in almost 50 years. And in certain times, it's been as high as 8, 9%. Okay. Last year it was 6%. This year it's 6.4%. So do the math. You're getting a guaranteed return of 2 to 4%, and you're getting a non-guaranteed dividend. Here's how this outweighs your savings account. In your savings account, how many of you guys have a high yield savings account? And if you do, let me know what the interest rate is. Usually it's around 3, 4, maybe 5%. You got to pay tax on that. So I get a guaranteed dividend, I get a non-guaranteed dividend of 6.4%. All right. I don't pay tax on that. That comes back to me tax free. Okay. So all of that growth that I make, when my cash value makes money, I have it compound back into the policy. I've got a line of credit, 95 to 100% equal to the cash value. Okay. So now I'm able to have $10,000 of cash value here. I've got $9,500 to $10,000 line of credit. Am I making sense so far, guys? There's 17 of you guys on here so far. All right. Smash that like button if you're loving this so far. All right. As a matter of fact, invite people to this. Share the link. Send it to friends. Okay. But I want to know, are you pulling value from this so far? I want to hear from all of you guys. I got Dustin on here. I got Matthew. I think we got 1 or 2 other people. Let's hear some other comments. Don't stay stagnant here. Ask questions, contribute, blow up the comment section here. Okay. We want to make this active. Am I making sense so far, guys? I'm going to drink some water real quick. Okay. So the next thing here, we got this policy. We're stacking cash value. And again, you want to do what is called a HEC-V, high early cash value. That's going to grow your cash value quicker than how most people structure these policies. Do you know how many times I hear from people? I heard from a guy the other day. He's a member of the Capitalist Network, my company. And he says, Ben, I've got $105,000 of cash value that I've been stacking up. It's with this company. I think it was National. And he goes, I don't know if it was structured right. We do a little bit of research. We start digging in. We realize that if you lined up his policy side by side with mine outpaced his cash value by 50% in the same period of time. Okay, so you have to set these up properly and not work with an idiot. And unfortunately, 95% of advisors are idiots. All right, so you got to set it up properly. Now that's step 1. You open the policy. Step 2, you get the line of credit. Step 3, you need to go into assets that cash flow. And again, as I promised, in a second here, I'm going to screen share and I'm going to show you another asset that I use that is not insurance that many people can do, where I've used it to become my own bank as well. Okay. So step 3, you got to invest in cash flowing assets. I like 2 in particular. I like real estate and I like oil. Okay. The reason that I like these is because there's a lot of tax benefits to investing in real estate. There's a lot of tax benefits that to investing in oil. Now, what keeps a lot of people from taking action is they don't want to do it on their own. They don't know how to invest in real estate or oil. They don't know who to trust. And that was a big problem for myself as well, because I made mistakes of investing with the wrong people, of not knowing what good investments looked like. And until I learned that and asked the right questions and got in the right rooms, I made mistakes. And that's why I have the Capitalist Network. I put all the people I use to build wealth under one roof, provide the strategy, provide the mentorship, and help people go into the very same opportunities I'm investing in right alongside me, so there's no guesswork. So it's very important to understand that. So I'm going to give you an example. All right, we've got our whole life policy now, and we've got our line of credit. So that's great, but how do we start the infinite banking process and build cash flow? We want to go into something that pays us cash flow. And I'm going to give you guys some math real quick. So if I've got a whole life policy growing at 8 to 10% annually, all right, the really cool thing with this line of credit is I'm borrowing at 4 to 6%, right? So my line of credit is between 4 and 6%, interest rate environment depending, okay? So if I'm growing at 8 to 10 and my rate is 4 to 6%, and inflation is 2.5 to 3%, I'm still hedging inflation before I've even made an investment. So now I take that line of credit I'm drawing on a piece of paper in front of me, and I invest in something that cash flows. So one of the things I like to do is invest in apartment complex funds. So I go into multifamily deals that have cash flow, okay? I'm going to give you an example of an existing deal, and I'm actually going to show you one, okay? I'm going to need you guys' help in a second here, because I'm going to screen share, and I want to make sure that you can see my screen. Let me know if you guys can see this screen here. And I'm going to let this load for a second, okay? As a matter of fact, I'm going to pop open YouTube here, and I'm going to go on my own channel so I can actually see here. It's black. Should you guys see anything now? It should say strong and diverse job market. Can you guys see that? Let me know. And if not, I will make sure to explain this. Nothing yet. Okay, so I'm going to do this. We're going to go here. Bear with me, and if this doesn't screen share, we'll get back to it. Okay. Can you guys see this? Okay, it says strong and diverse job market. Is that correct? Awesome. No, it still doesn't? Okay. That's okay. We'll stop the share, and we're just going to explain this. So I'm going to break down a deal for you guys. I want you to imagine that you have put some money into a whole life policy, and you've stacked it up, okay? And you've gotten to the point where you've got $25,000 of cash value. And you can write this down on a piece of paper if you want, guys, okay? So you've got $25,000 of cash value stacked up in your whole life policy. That's growing at 8%, all right? You're going to take your line of credit, and I'm just going to give like kind of more conservative scenarios, all right? Your line of credit's at 6%. You've got $25,000 worth line of credit, and you're going to go deploy that. You want to start building some cash flow, okay? We've got a real estate deal in here, and I'm going to go over the projections, and this is based on historical performance that we have done in many multifamily deals. And I'm going to break down where we invest and why we invest, where we invest, and all this good stuff. So this particular deal is a 5-year multifamily apartment complex. This is a 289 unit luxury apartment complex in Lenexa, Kansas, okay? And this deal was projected at 2.37x multiple on invested capital. This is a real estate term, MOIC, multiple on invested capital. And so what that essentially means is that if somebody put in $100,000 over a 5-year period, we projected that to be worth $237,000 at the end, okay? So if I take 25,000, I'm going to get my calculator out here, and I decide I'm going to go into a real estate deal here, okay? I am required to pay interest-only payments on my line of credit. So I've got 25,000 at 6% interest. I've got to pay $1,500 a year minimum to service the line of credit. Okay. But I've got a real estate deal here that's a 2.37x multiple on invested capital over a 5-year period. So if I throw 25 grand into that, what we're saying is that's going to be worth $59,250 after 5 years. Okay. So I'm going to invest 25K with my line of credit. It's going to be worth $59,250 when I exit 5 years from now. So what I have to do is I've got to take my $1,500 a year of interest only payments and I've got to back that out over 5 years. Okay. So I got 1,500, 1,500, 1,500, 1,500, 1,500. All right. That equals 51,750. And then I'm going to take back the 25,000 line of credit. What it's going to do for me is after paying the interest payments on the line of credit, after the investment, I end up netting a profit of $26,750 before tax. Okay. Are you guys following me so far? I invest 25,000. I use the line of credit to do this. All right. I service the interest payments on the line of credit. Okay. After 5 years, I've made $59,250. I've got to subtract my $25,000 line of credit, and I've got to subtract my interest payments of $1,500 a year. Okay. I net $26,750. Now, here's the key here. You can do a couple things here. You can decide, hey, I want to pay that line of credit back as quickly as possible. Okay. Or you can just make that minimum payment. If you pay that line of credit back as quickly as possible and bring that balance back down to zero, so you have 25 grand available to do it again, you can go repeat that process and not have to wait out that 5-year cycle. So you've gotten all your money out of the deal again. You've paid that line of credit back. You could go repeat it again. All right. And anything else that comes in your pocket. That is why they call it infinite banking. That is how to become your own bank and actually make these plays into real estate. Now I'm going to talk about some tax incentives. I'm going to talk about oil, and I'm going to give you a couple other strategies here, as well as something else that we use to become our own bank. Okay. Now, the next thing here is I'm in real estate because I like the taxes. So when you get into certain funds, a lot of times they'll be able to extend to you any tax incentives down to the investors. All right. And this is a fund that I'm actively involved with. Okay. I'm one of the fund managers here with our real estate company. So I like to do this a lot, again and again and again. Now, take any number you want. 25K, 50, 100, a million, it doesn't matter. The math is all the same. But here's the thing that we forgot. That whole life policy is growing year over year over year. Okay, so the cash value right now is going to be higher 5 years from now. So what do you guys need to make sure you're doing? You need to make sure that that $25,000 of cash value right now, that's going to be worth 30, 32, 35, 40. A few years from now, you're leveling up that line of credit. So when you go to do it again, you've immensely increased your leverage. Does that make sense? Are you guys following me so far? And any questions you guys have, just drop them, okay? I will answer. So that's my real estate play, okay? Now, I'm going to go into oil, and I'm going to talk about tax, and I'm going to talk about another asset that I use, okay? If you look at traditional, how many of you guys have a 401k, an IRA, a Roth, or some sort of retirement account? Let me know in the comments. Who's got a Roth? Who's got a 401? Who's got a traditional? Let me know in the comments. Wife has a 401, Dustin Brockman. All right. Don and Vern. Do I see some family on here? Awesome. So if you take a 401, all right, or a Roth, I don't care. Some of you guys are like, hey, I've got a Roth. It's tax-free growth. Yeah, that's cool, but you're locking your money away for 40 years till you're 59 and a half and losing 3% to inflation. So by the time you go to collect, you've lost 120% to inflation and you have no leverage, okay? So even if it grows tax-free, there's a saying in Italian, and it's non me ne frego un cazzo, which means I don't give a shit. It's a dumb idea, but we've been convinced that it's good. Okay. And so you got 7% growth historically. If we take 7% growth in a 401 IRA, I don't care. Okay. Let's just say it's a 401. Okay. We've got 7% growth. And let's say that we're able to put $10,000 a year away for 40 years. We're going to invest 400 grand at 7% growth for 40 years. We're losing 3.2% to inflation. The last 40 years of inflation in the United States is 3.2%. These are the hidden costs of time, tax, and fees that nobody talks about. But we're told, invest in a 401. Invest for 40 years. Get your little stupid, dinky employer match on it because it's going to be good. Okay? So you get 7% growth, 3.2% inflation. You invest 400K over 40 years. When you go to collect, you're going to have a 400,000 invested. You're going to have a nominal value of 1.91 million, roughly. You're going to be in the 24% tax bracket. You're going to pay about 380 to 390,000 of taxes. You're going to have 1.6 million left, but because of the loss to inflation, your purchase power is 450 grand. Okay, so good job. Y'all invested 400,000 over 4 decades to have the purchase power at the end of $457,000. That sounds very risky to me. Wait that long, spend half your life, and not have anything to show for it. That sounds like what I would call risk. Okay? Now, if you understand, let's get back into infinite banking and real estate. If you understand what you're investing in, there's a lot less risk, isn't there? Okay? I'm going to give you an example. Olive oil and avocado oil are some of the healthiest oils for our body. Vegetable oil, sunflower oil, or canola oil, which is interchangeable with vegetable oil, are some of the least healthy oils for our body. Most foods that you buy in the grocery store or at a restaurant are made with canola oil or sunflower oil or safflower oil or vegetable oil. These clog arteries, whereas olive oil is artery cleansing, okay? If you did not know that, then it would be an unknown risk. You would not understand that the food you're eating is maybe not giving you optimal health. But if you understand it, you're aware of it. And if you understand that, it is not an expense to pay $30 for a bottle of olive oil in the store versus $5 for a larger bottle of canola oil. Do you see where I'm going with that? By not understanding the investment, you don't understand how much you are fucking yourself, okay? Or how much the system is, all right? One could say investing in oil or investing in real estate is risky. It is risky if you are an idiot. It is also risky if you trust someone else to know that investment for you. So the reason I'm saying that is we invest in markets we know and that we understand. If you invested in real estate during COVID, in Detroit, Michigan, in Austin, Texas, in Los Angeles, in San Francisco, your real estate was not cash flowing because the law said, hey, you don't have to pay your rent. You don't feel emotionally well. You're trying to decide whether you want your hair to be purple or blue this month. It's okay. Don't pay your rent. And so people that owned properties lost cash flow. They couldn't sell them. They weren't cash flowing. They were losing money. And a lot of properties went back to the bank. If you understand things like this, then you understand how to eliminate, not all, but a lot of risk. So the properties that we invest in, a lot of them are in the Kansas City, Kansas area, because Kansas City has had year-over-year rent growth of 8 to 10%. The only market that beat Kansas City was New York in recent years. And New York had rent cap, it had rent control for several years. So New Yorkers woke up overnight to 30-40% rent increases by the snap of a finger. It was like a forced rent growth. Whereas Kansas City has had natural rent growth year over year of 8 to 10%. It does not have exposure to natural disasters. It has a very diversified job market. No more than 15% of any job sector makes up the market. So you can have a recession hit and it gets less impacted compared to a market like Detroit, where you're heavy in manufacturing. So COVID hits and the Detroit real estate market goes flat and it tanks, right? So when you understand things like this, you understand there's a lot more sustainability there, a lot less risk. Major companies coming in. Meta is already there, and Facebook's building on this multi-billion-dollar facility. Google's there. You have data centers there. The cost of living is relatively cheap. The quality of life is relatively high. So those make it a really good area to invest. So we're able to take deals like what I just said and do them several times. Whether it's an apartment complex we're building or one we're adding on to, these are the type of deals I invest in because I understand them, because I work with people that I trust and have known for several years, and because it's not the first rodeo that we've been involved with, okay? If you took what I'm saying today, all this information, and you went out willy-nilly and you invested in a market that you don't know, or you bought a little duplex, or you needed to fix it up and you didn't know contractors or property managers, you're exposing yourself to a lot more risk. Okay, so real estate, that's one of the ones I like to go in. Am I making sense so far, guys? Let me know what questions you have here, okay? Now, let's dive into another way you can become your own bank, and then I'm going to get into another asset that I do this with, okay? And before I do that, I'm going to mention a couple things, okay? And I'm also going to be mentioning my book here as well, which you'll have an opportunity to get a free signed copy of, okay? If you take that retirement example I just said, you had $457,000 of purchase power after 40 years, okay? If you simply were able to double your money by going into real estate deals that you understand in markets that appreciate, if you were able to double your money every 5 years, without even increasing your leverage in your whole life policy, without even increasing your line of credit, if you simply took 100,000 that you had saved up, say it took you 10 years to do that, and then you deployed that into a real estate deal, 100 grand, and went through a 5-year cycle, then you did it again, then you did it again, then you did it again, and you did 6 whole deal cycles, you would arrive in the same 40 years having over $3 million after inflation, while a homie here with his 401k has $457,000. Okay? You did 7x more in net worth in the same amount of time with the same money. So the reality is you can do way more in less time if you understand how money fucking works. Okay? The people that I work with are multimillionaires and billionaires. I don't get my money advice from Joe Schmo at ABC Advisors LLC that is paid to sell you insurance. I don't. I get my advice from people that are worth millions of dollars and hundreds of millions of dollars. Because at the end of the day, and this might sound poshy or whatever, $1 million isn't very much, guys. It's not. If you're sitting on $1 million here, if you have $1 million right now, it's not going to it doesn't get you very far. You got to put it to work and have it go make more babies. That's why I have a chapter in American Mediocrity called Make Money, Have Sex. You have to deploy it and make it go to work for you. And you take your earned income and you save it in something rather than a savings account, a whole life policy or something of that nature, and you compound the interest, and then you put it to work. And you create cash flow, then you level it up, then you repeat the process and you do it again, and you make your money work for you, okay? Your money's got to go make babies. It's got to make other money babies that make more money pregnant, and it's got to multiply, and it's got to go be your best employees, your best workers, okay? We don't understand that. We work 40, 50, 60 hours a week. We take home money. We live off of it. We save it. We repeat that. We stack up vacation days, and that is what we call American mediocrity. That is why I named the book American Mediocrity, okay? You got to not do that because you're going to arrive in the same place. My dad was a police officer for 41 years. He's a very hard worker. He has extreme work ethic. When you shake his hand, you feel the core of the earth, but beneath your feet. He'll break your arm shaking your hand. I learned tons of work ethic from him, and he was a Marine in Vietnam, and he did all the things right. and he saved up and he had a high income job as a police officer. And when he retired, he was like, well, shit, I got to go back to work. This advice doesn't work. It doesn't work. It never did. Back 20, 30, 40 years ago, the American dream was go to school, get a job, have a family, be 65, retire, and you're going to do all right. It doesn't work anymore. It never did. And it's not anybody's goals now. And the 27 of you that are on here, it's not your goal because you're watching this. So you cannot use average information to get better than average results. All right. So let's go into something else here. I like to use oil. Oil's another great investment. Okay. Now, oil, you got to work your way up to. So I'm gonna be very brief on this subject. Oil is a great investment for all of you guys that are high income earners or higher net worth, because you can write off what you invest in oil against your earned income. You effectively can have ways to pay as low as 0% income taxes. Okay. Oil is high cash flow, or it can be. It's also an investment that you must understand, because not all oil wells or oil investment opportunities are created the same. I'm not talking about oil stock market. I'm talking about participating in oil wells. This is what we do inside the Capitalist Network, okay? And I'm going to give you guys an opportunity to get involved in that with a free trial in just a little bit here, all right? Now, oil, I love because you get write-offs on the investment capital against your earned income. It can be very high cash flow, and you can exit it. When you exit, you can 1031 into other oil deals, and in some cases, you can transfer from oil into real estate or real estate into oil. So it's an asset class I really love. Okay, I'm not going to talk about that too long. We have oil opportunities inside TCN. When you become a member, you'll be made aware of those. We have real estate funds inside TCN. You do not need to have high amounts of capital to get started in it. So it's pretty cool. But I promised you guys I would tell you about another asset that I use to become my own bank. And this is probably my favorite one. And I'm very excited about this. So please listen very closely, okay? And I see some questions coming in, so don't worry. I will drop answers in here. I will look at everything that you guys are saying, all right? And there's 22 of you guys watching, so please ask more questions. I see a few of you guys asking questions, but no question is a stupid question. As long as you're not asking me, what do you do for a living, Ben? Or give me $100,000, okay? Ask any question that's related to this. I'll be happy to answer, all right? So please engage here. I want to hear from more of you guys. Gold and silver. I love gold and silver. I would suggest right now you guys take out a piece of paper and take notes on what I'm about to say. Please. This is very, 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 very valuable, okay? Gold and silver since the beginning of time have been used for monetary exchange. Until 50 years ago, the GSR, gold-silver ratio, was between 16 and 15 to 1. What that means is 16 ounces of silver bought the equivalent of what 1 ounce of gold was. So you want to write down GSR. That stands for gold-silver ratio, okay? The ratio was always between 15 and 16 to 1. You had the Monetary Coinage Act of 1792, which regulated the ratio at 15 to 1. And then in 1834, there was the Monetary Coinage Act of 1834, which changed that ratio to 16 to 1. In 1935, the United States government was in a huge deficit from the stock market crash and from the Great Depression. They needed a way of scamming the American public into creating money. So they bought gold back from people like you and me. They made it illegal for us to own, and they bought back gold at $25 an ounce when it was actually worth $35. That is a tax. So you made a $10 profit per ounce, and they bought it back. And after World War II, there was something called the Bretton Woods Agreement. The United States made out very strong during World War II. The economy was booming. We were in a good place. And countries turned towards us and they said, you know what? The United States did pretty well. We need to decide what our world reserve currency is. And it was decided that it would be the USD. And it was decided that it would continue to be backed by gold. Gold has value because central banks hoard it. Okay? Gold is, how do I say this? The United States government is a whore for gold. Okay, the United States government is an absolute hoe. It is the OnlyFans model when it comes to gold. Okay, the United States government is horny for gold. They love gold. Okay, they want to be filled up with gold. Okay, and we were that way until 1971. We went away from the gold standard. We went into a larger environment of inflation. We became what is known as the petrodollar. Our dollar was then to be used to do energy deals. And we didn't do a good job of standing by that. In 2020, 2021, we shut down the Keystone XL pipeline. That was able to pump 600,000 barrels a day of oil. And then we withdrew from Afghanistan, where we were protecting Saudi Arabia's oil reserves from Iran. So we ended up basically saying, screw you to the rest of the world. We showed that our dollar was not to be trusted. And then what happened? Central banks started hoarding gold. And from 2022 until now, central banks have stocked up on more gold than any other time in history, which has caused a demand for gold, which is why we've seen it double in the last few years. Gold has literally doubled in the last few years. Doubled in value. Banks like Turkey, central banks like Turkey have brought record-breaking amounts. Banks all over the world have been stocking up on gold, okay? I'm going somewhere with this. I just want you to understand the history of this, okay? Now let's look at silver. And my point to this is the ratio skyrocketed because silver appreciated. It hit as high as, $40, $45 an ounce, but it didn't go to $3,500 an ounce or $3,400 an ounce like what gold did, all right? It started going up, but it didn't hit that, okay? And so we moved to this point where the GSR, that gold to silver ratio that had always been between 16 and 15 to 1 for thousands of years. Only in the last 50 years or so has it gone 40 to 1, 50 to 1, 60 to 1, 70 to 1. In April, it reached 127 to 1. Okay? So what does that mean? In one sense, it means that gold is immensely overvalued and could plummet. In another sense, it means that silver is immensely undervalued and should go way up in value. Okay? Now, I'm going to tie this into how we infinite bank with silver and gold in a second, and I want to explain the immense leverage opportunity that's here to become your own bank with gold and silver. All right? So bear with me for a second. Silver has a major industrial demand. Okay, silver is used in industry. Gold is used by banks and for jewelry. Here's a statistic for you. Only 27% of silver mined today comes from silver mines. The majority of it comes as a byproduct of mining gold, copper, lithium, zinc, or another mineral or metal. Okay? We have depleted the shallow, easy to reach, high-grade deposits of silver. And by 2040, at current rates that we extract silver out of the ground, we will have exhausted the easy-to-reach silver deposits in the entire world. Silver has something called an ASIC cost, all-in sustainable cost. The cost to mine silver is only a few dollars less than what silver is worth right now. The cost to mine gold on average is about half of what gold is per ounce right now. The reason I don't think gold's going down in value anytime soon is because central banks are hoarding it. And it's because if you look at major mining projects in the United States, it's the central banks and the institutional money that is invested in these projects. The very analysts calling for gold to be worth $4,000 an ounce work for the companies that own major mining stock, that are raising capital for mining projects, okay? So let's wrap this up in infinite banking. Now you know the story behind that. I believe that silver is immensely undervalued. I believe silver is a great investment. I believe gold's a great investment. Here's the case in point. Your dollar from 2015, do you guys know how much it buys today? $1 from 2015. Do you guys know how much it will purchase for you today? And today's purchase power, and don't go chat GPT this, what's your guess? $1 from 2015. How much do you think it buys today? Somebody said 13 cents. Somebody said 50 cents. Okay, well, you guys are going in the right direction. It buys 73 cents. What does $1 of silver from 2015 buy today? What does $1 of gold from 2015 buy today? Almost $3. Almost $3. Okay, so I'll make this simple for you guys. I have a line of credit against my gold and silver. The $100,000 of gold and silver from 2015 is worth $280,000 today. My line of credit is 75% loan to value. So what does that mean? The $100,000 of silver from 2015 got me a $75,000 line of credit. That silver is worth $278,000 today. My line of credit went from $75,000 to $208,000. From $75K to $208,000. All right. So this is why I use both gold, silver, and whole life insurance to become my own bank. And I go into oil and I go into real estate. Okay. Now I'm going to drop something in the chat for you guys. Okay. That we have put together for you. And I'm going to invite you to do. I own a company called the Capitalist Network. I took all of my wealth building partners, the CPAs that help me pay less on taxes and invest in a protected manner, the financial advisor that's one of the best and top producers in the entire nation that actually has access to these institutional grade whole life policies, because very few advisors do, very few advisors know how to structure them. The lines of credit that I get against my policy, who to buy gold and silver from for wholesale prices that you will not find online. TCN members get wholesale prices, okay? Our oil deals, our real estate deals, I put them all under one roof so that you could learn, get access to these tools, get help setting them up, get help being able to set them up, and be able to invest in the very same deals that I invest in. It is all inside the Capitalist Network. So I put a link in the comments. There's a 7-day free trial. You're going to get access to modules on economics. You're going to be able to book a free onboarding call with me where I will screen share with you, where we will come up with a game plan specific to your goals. All right. And you're going to be able to get access to my community. There are entrepreneurs in there in all walks of life, 20 years old, 75 years old, everywhere in between. We have millionaires in there, we have billionaires, and we have people just getting started. So if you want to be able to learn these methods, if you want to get the mentorship, if you want to be able to know what deals to go into without having to go do it on your own and do the guesswork, we have provided it all for you inside TCN. So I've included a link in the comments here. It's thecapitalistnetwork.com. All right. And I've included it there for you guys. You can click it. You can open up another browser, whatever. You can save that link. I encourage you to join. You'll get a 7-day free trial. You'll be able to, in that 7-day free trial, book an onboarding meeting with me. You'll be able to get access to the modules. You'll even be able to show up to next week's live meeting. Every single week, I go live on what we call Investor Power Hour. And sometimes I bring on our partners, our tax attorneys, people you're able to get questions directly answered by. And we help you with all of this. Sometimes I'm breaking down deals. Sometimes it's a tax strategy. Sometimes we're talking about cars as appreciating assets. This is not a virtual background. Okay, this is these are real. Okay, so we break all of that down for you guys and help you get in here. Now, I work with people that are just deploying a few $100s a month at a time, all the way to a gentleman I spoke with this morning. He's like, man, I've got $3 million. I'm paying so much in taxes. I got to move. Okay. So we help you with where you're at and help you start actually being able to make moves in here. We go over how to optimize your 401s, how to get out of those traditional assets and maybe have better strategies, going self-directed and being able to create leverage. We get you wholesale prices on gold and silver from one of only 27 licensed resellers of the United States Mint. TCN members get prices you will not find online. We help you get that line of credit set up, which is ironically a few miles down the road from me. It's kind of funny. We have real estate deals for you to go in. I actually have a fund that we're opening next month for you guys to get involved in multifamily real estate. We do this for both accredited and non-accredited investors. You can get into oil deals. We do a millionaire mentor meeting every month where I bring on one of my partners so you can talk directly with our oil guys, my real estate partners, our advisors, all of this stuff, our CPAs, and you're able to network with all the other entrepreneurs in the program. Once you get through module 5, I actually send you a free signed copy of my book, American Mediocrity. There are several chapters in here. This is all about business, finance, politics. This is about the times I was homeless, had no money in the bank, starting a business, losing it all, getting to several $100,000 a month, having to start over. All of the lessons of entrepreneurship I wish somebody had been able to teach me and that I had a mentor on are all in this book. And we're not politically correct in here, okay? We have make money, have sex. We have a lot of cool chapters in here. So you'll be able to get a free signed copy. I sign them every month. I send them out to you guys. Encourage you to pick that up. And I want to know questions from you guys now, okay? So click that link in the comments there. Join, get on the 7-day free trial. And in the meantime, I'm going to scroll up here and I'm going to look at some of the questions. So somebody said, Dustin said, at this point, how hard would it be to take what's currently in our 401k and move it to a whole life policy? So doing that, you're fairly limited. You are fairly limited, okay? And I am not giving financial advice here, but something I've seen people do is convert from a 401, do a conversion, be able to go self-directed so that they can invest in things like real estate, okay? And when you do that, because we do SEC registered funds, so some people will self-direct out of a retirement account into a real estate fund, okay? Now, they cannot pull out of that self-directed account early without paying fees. You can't, okay? But sometimes what you're investing in appreciates so much that taking the penalty for that early withdrawal is better than waiting because of how you can multiply that money. Okay. And this is something that we will be able to help with because we'll partner you with one of our advisors in the program that can help optimize that. Okay. Eddie manages close to $1 billion in assets, has 60 plus rental properties, is our infinite banking god in here, in addition to myself, obviously, right? And he'll be able to look at where you're at, what's in that, what can be converted, what can go self-directed. If there's another retirement route you can go and it's optimized a little bit more. There's so many strategies in here. You guys that are homeowners in here, there's ways to save on your home, deducting against your earned income. There's short-term rental strategies. We get into the short-term rental market. There's so many different things, guys. Let me look at other comments in here. I want to hear from all of you guys. There's 25 of you guys on here. If you've loved what I've said so far, please smash that like button, okay? And if you have a question, I want to hear from you. There's 24 of you guys on here. I want to hear from every single one of you guys. So please take time to drop questions in here, okay? Let's see. In the high value whole life insurance policy, what would be the cash value versus, this is a great question. So what Sampath's essentially asking here is like, what's the ratio of insurance to cash value? Here's the best way I can answer that. Every policy is set up specific to the individual, okay? The goal here is to have as little insurance as possible and to have the cash value growth outweigh the insurance costs. So it's all in how you set it up. I can tell you that I've had my most recent policy open for two years and 7 months. And my insurance cost is a fraction. My growth alone outweighs my insurance costs on an annual basis, okay? And so it has to be set up properly. These are not designed to be where you have overinflated insurance costs or where you have a rising insurance cost year over year over year. I can't give you like, it's 7% and your cash value is 93%. But what I can tell you is that these policies are designed to have a very nominal insurance cost. You have ways of paying that more in the first year or two, so that you have strictly cash value growth predominantly for the next few years. And that's all going to come down to talking with Eddie, structuring it the way that you want, and making sure that you have that cash value maximization. The other thing that I can tell you is that within 60 to 90 days of opening a policy, that's typically when you can borrow against 80 to 90% of that cash value. Okay. So that gives you leverage there. After a year, typically that full 100% cash value unlocks, so you can go back in and increase that line of credit. Now, also, because we have so many banking relationships, this is not a guarantee by any means. This is just education, okay? But oftentimes we're able to help facilitate you getting that line of credit. And because we do so much business with these banks and credit unions, oftentimes they'll give us a little bit of a rate cut. And then we're able to extend that to you and gets you a little bit lower interest rate on that line of credit than if you were going off the street and getting it yourself, okay? Let me just make sure. And somebody said most people use 60% cash, 40% benefit. And what I'm saying here is it needs to be even more cash and lower insurance. Mine's not anywhere near 40%, not anywhere near. And I don't want it to be, all right? If you want a high insurance benefit because you want to, give a lot to your heirs or your beneficiary when you die, great. But have another policy for that. Okay, structure this one in a way where you are maximizing the cash value, right? Now, what else was I going to say? Let me know what your other questions are, okay? And again, I'm going to drop that link here for you guys. There we go. Gold and silver, whole life, going into real estate, going into oil, okay? Every week, we do a live meeting. Every month, we have a millionaire mentor meeting. And when you get in, you'll actually be able to see a map of where all of the members are. I was just talking with the gentleman this morning. He's like, I'm in Orlando. I'm like, we have several members there. So he's going to go meet up and have lunch with a bunch of them, right? We've got a lot of really cool people to network with. We also do events, conferences, masterminds, retreats where, you get to meet me in person, other members. It's a really cool environment. I bring in our partners, our oil guys, our real estate guys, so you can network and meet directly with them there. Sometimes it's, more of a business event. Sometimes it's more of a mastermind or a retreat. So these are really cool things that we offer, okay? Somebody says, how much cash, what kind of minimum cash is needed to get started? When I got started, I was putting in $800 a month, okay? And I know people that have put in $500 a month and even a little bit less. I wouldn't do anything unless I had a few thousand a year to at least start building. Anything north of that is great. Once I was able to have larger chunks, like 10, 15K at a time, I did what was called, or what is called, a 1035 exchange. So I built up for a couple of years, and then I converted into a new policy, starting with more cash value. And I took the cash value from the old policy, along with a little chunk that I had saved, and I went back and I opened a new policy. All right. And that allowed that one to start growing with a bigger nest egg, if you will, off the bat. So that's a way that you can just at least get your foot in the door and get started. What other questions do you guys have? And again, dropping that link in here, it's a 7-day free trial. You're going to be able to book a one-on-one meeting directly with me. You will see that once you get inside. I really wish I could show you guys the inside of that, but my screen share was not working earlier, and I apologize about that. Okay, that's something I will figure out here. What other questions do you guys have? I got a couple more minutes here before I hop into my next meeting. Want to see you guys inside TCN. Encourage you guys to join. There's no risk to you. I never will sell this off of like, if you don't like it, you can cancel. I don't believe in that because I don't want anybody in it that doesn't see the value. If you don't like it after the 7-day free trial, you can cancel, all right? And you will have spent no money. At the very least, you'll learn, suck up the knowledge, have a one-on-one meeting with me, dive into the modules, show up to our next meeting, all right? See what we're all about, introduce yourself in the community, meet all the other entrepreneurs, start learning how to do this, and it will have cost you nothing to join. If you don't like it at the end of the 7 days, cancel, because I wouldn't want you in there anyway if you didn't see the value, all right? I never pitch off of bonus stacking, plus you'll get this and this and this. I don't believe it because I want you guys to join based on the value that you see I've presented today, the value that you see in this information, and the value you see not waiting 40 years investing in some shit products and shit financial advice just for you guys to have the same amount to end with. This is what builds wealth. These are what capitalists do. This is the strategies that capitalists that are wealthy actually do. These are some of the best CPAs in the business, some of the best oil funds to go into. We do business with guys that are doing business with Robert Kiyosaki. This is no joke. These are who our partners are. All right, the best of the best. So I'm going to drop that link one more time. There you go. It's thecapitalistnetwork.com/your-own-bank. Just click the link there, or just go to thecapitalistnetwork.com and join. Start your 7-day free trial. Appreciate you guys being on here, and we'll see you back on YouTube in the next video. Take care, everyone.